27th June, 9 o'clock, so pre-market open. And as usual, we're looking at November contract on the UK wheat 2014. We're starting as usual with the monthly chart at the present moment to see where we are on the bigger time frame. And you can see here that obviously we're down at 137.20. This is the November contract. This is a stitch together of the continuation chart. This is the low of 2011 and obviously the high of 2009. You can see it's quite an important level. We broke through here 2008, unable to break through it in 2009, shot up in July 2010, tested in end of 2011-12, and we're right on the money at that mark at the moment. So we're trying to look at signs. Is this going to break through, or is this going to hold and we get a bounce? If we revert back to the July situation, we got a bounce there. So that's the one I'm going to look for give me some kind of indication, signal what we had on 2008 to see the same. So just zoom in on this square here. So we go down the time frame. This is the daily chart, same square here, and you can see the price action that we've had. I was watching for a close above the 5-day moving average to give us a signal we were going to get bounce. We had that end of the last week, but unfortunately short-lived, only 3-4 days above, and we shot right back through it. Just zoom in on this square here down on a daily chart, and you can see here the price action. The green is my 5-day moving average. Here we had the sell 7th of May, had another buy signal here when we hit 142 here, but it was quickly reversed with this big red candle, engulfing candle here. We got a sell signal. Now we got our buy signal 18th of June last week, and we've now got a sell signal coming through here. So what is this telling us? It's telling us the market is respecting this level, hasn't broken straight the way through it. It's a significant level, as we can see on the monthly chart. We now have a buy signal and a sell signal, so we need to do some more work around this level to see what's going to happen. We could now have a sort of a consolidation mode over the next week until we make its mind up what's going to happen. If we draw back in, as I say, I was looking back in 2008 when it tested there. Here's the level here. This is the November 2008 wheat chart, 136 here, and you can see we got a bounce up here in June, and then we had this big fall all the way down to £90 a tonne. So you can see how crucial this level is. My weight at the moment, since we've been failed to break through it on this first push, and we've come up and retested it, I would still look for a bounce. My preference would be that bounce would be back up to the 6-day moving average at 148. But as always, we have to let the market show us what it wants to do, around this level. And obviously, I'll put updates and keep an eye on it during next week. Here's the catalyst that we followed, the big fall in the US wheat market. We've discussed the El Nino effect that's possible there at the moment. It's just a general grind down trend, short-term trend. We've had a down month in May, we've had a down month in June. As we get the new month, let's see what the price action is on the US wheat chart there. And finally, just look at the Aussie rate. Nothing to say there, stuck in this sideways pattern. We tested lows here. I put a lower, I'm at higher low here, 350, and we're back up to 357. So we just keep an eye on this November contract. We're at this important low here that was last tested in 2011, and let's see if we can pick out any sign of if we are going to get a bounce or a break right through it. And I'll have an update this time next week. Thanks for watching.